What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is to provide you guys some upcoming events, some upcoming earnings to get you prepared for the week ahead. So, if that sounds like something you're interested in, consider subscribing, as I do provide daily updates as well to get you prepared for the day and the week ahead in this glorious market. So it's been a very pivotal week last week. I'm gonna go ahead and pull this up because normally I do tend to forget. But one of the biggest things that came in last week was our core CPI and our expectations for that. They were coming in around 8.1. We have to understand that at peak inflation thus far, we've hit 9.1. So we've come down quite a bit, essentially from uh, triple 75-point basis moves into another monetary policy coming in November 2nd. And so there's some really interesting things here. Again, first off, inflation is not coming down fast enough. That is the number one big issue. It doesn't matter what is going on right now. It's the Fed versus inflation, and inflation is not coming down fast enough. So they will at least come in at 75. More than likely, I wouldn't be surprised if they came in at a 100-point basis move, considering, again, we are coming into the winter months. There's going that seasonal demand is going to come in more when it comes to oil and a lot of these other commodities. And again, we're going to see, especially on um, the next core, which is November 10th, we'll see more of the hurricane demand coming in. We just caught the tail end of that. Now you're going to see more of that demand come in. So you're going to see a lot more issues, I think, on that core. The question is can we get it under 8, or is it going to start popping back towards 9 is the issue. I do believe we could strongly see over 9, potentially more so around that January, February period in the middle of winter. And then at that point, I think we could potentially peak from there and calm down. Now, the thing is you have to understand, in this week, this is what was pretty crazy. We had this massive sell off. Uh, we've been attempting, and what made me believe that we could actually rally, even though there was a lot, the market sentiment is completely bad. But if you give it hope, you get these crazy rallies, and you have to understand that the only reason we got these massive spikes, and this one exactly here too, is because essentially the ECB has been messing with their bonds to keep them afloat. They are trying to purchase bonds. Nobody really knows how they're purchasing bonds to get them to essentially pay pensions and to pay mortgage loans, because of the fact that, or else the system would have collapsed about 2 weeks ago. And being said, it leaves us in this spot where they were supposed to stop on Friday. We'll see how it ends up on Monday if we don't gap down. But things are extremely bad, and not just by a little bit. And something I try to get out there, and I'm trying to let people understand, is, being in the market for quite a few years now, you see a lot of different things, but not as bad as this, and not so much bad, right? There's different things going on. There's different issues going on here that are very that threaten our financial system, and not just our financial system, but the financial systems around the world. And so, with that being said, you have to be very mindful and very careful of that because of what's being said here. So, um, again, and then you got media throwing out this disclaimer that there's going to be quantitative easing and all these other different things. That's great, but how is that going? This is great, but how is that going to work? How are these things getting funded? You can drive hope in the market to try to push it up, which they've been doing, but these bounces are absurd, right? We haven't really had a bounce, and the only reason we get a bounce is because, quantitative easing, and then we bounce, and then wanting to find out that it's not what it is, and it's just a rumor, and then we sell off again. Nonetheless, we are starting to get into earnings here. You have to understand JPM had earnings, even though there was some. The CEO of JPM, absolutely crazy. Just a couple days ago, he said that you know that there's not going to be no such thing as a soft landing. And then after they had earnings, he said, no, everything's going to be all right. Inflation, we got inflation under control, right? People are having to walk back statements because of what's going on. Again, big red flags here. And ECB is barely holding on. And I mean barely. And you have to understand, if they go down, they're going to sink essentially. Uh, the world economy is going to go with it. And the US, it could try to pretend that not everything is perfectly fine, but things are bad. The market sentiment is just bad. And again, I thought we would have rallied at some point towards the back half of this year. And I was seeing the price action on the last couple of days, and I was like, well, maybe there's a strong possibility we could hold here and potentially push up. Now, I said, if we break, I'm going to start buying. And I started doing that because of the fact that if you look at higher time frames, which I'll look at here in a second, um, well, you break that 50 EMA monthly, and you don't typically last long down in that area before you get a pivot. It's not saying we can't drop a lot. We can still drop quite a bit. Right now, there's no real big support that's going to hold. Maybe the 3,200, but you're going to have a couple 100-point drop from this point. Again, this is what I'm talking about. This is that my buying point right here, right now. Essentially, any major drop, we could still drop another 15% from here. Again, like I've stated, on average, a recession is about a 43% correction, and we've come pretty close to that. I'll bring that up here in a second with the essentially how far we've corrected thus far. But I want to go over this list here real quick. Wednesday we have core core CPI at 5 a.m. It's going to be interesting to see what's going on in Europe there. The beige book, again, I don't really think that's going to have much weight. At this point, it's really just monetary policy in core. Everything else in between really doesn't matter. Even the beige book or the FOMC meeting notes, nobody really cares. The Fed is now very blatant about what they're doing. It doesn't matter if it's Bostic that's on there, Powell, whoever. The big thing is they keep reiterating the same thing, that they're going to be hawkish until something changes. And I'm not talking about a little bit. And we need dramatic change in inflation. Inflation is getting carried away. And again, these 75-point basis moves, another 75-point basis move, another 100-point basis move, right? Really, what is it going to do? It needs to stop. Inflation needs to stop and stall and come down dramatically for the Fed to say, okay, well, now we're going to dial back. I think the Fed won't do that until inflation comes down to 4%. And then they're going to try to hold it at 4% and realize that the average of 2% it's going to be a long time before we see 2% again. I'm talking quite a while, because it needs to hold at 4 for the Fed to lay off, go neutral, in hopes that the inflation doesn't spike back up. And then they can start laying off and bringing it back down. So this isn't a long process. This is a very slow, tedious process. So nonetheless, we got core. Those are the next big things we're watching is core. November monetary policy in the second, and then we got monetary policies in January and February too. So it'll be interesting to see how we open up the year. Which again, I think if it's really peak, we're going to hit some pretty big higher interest rates before we start peaking down. Again, I'm thinking of roughly around springtime, or potentially start rolling back. Some are going neutral, I think, at that point. Potentially, again, we have to get some more cores. This is what we're doing, is we're waiting every month to see if it's increasing, getting worse, whatever the case is. But being said, we are in the middle of earnings. We do have Tesla on Wednesday. We have Netflix on Tuesday. I don't trade Netflix. I do trade Tesla. I want to see how these big corporations are starting to do. This is just the beginning of it. We got some bigger tech next week as well. We got Apple, Amazon, and Microsoft all coming in. So it's going to be extremely volatile. And if we start seeing these corporations miss by a lot, which I think is a strong possibility. You're going to see it, if not this Q3, you're going to see in Q4, which we're currently in, but we're reporting last quarter now. So I think we're going to really see that. And again, I think it's going to be a very dark Christmas, and there's not going to be a lot of buying right now, especially if there's massive amount of layoffs, because again, the Fed isn't going to dial back at all. And that's the next big thing, is continuing to cut jobs and cut more jobs. And then people aren't going to buy your home if you're trying to liquidate, because of the fact that they can't afford it. They just can't afford it. It doesn't matter how well they get paid. Right now, the dollar is dialing back, but you have to understand, like, the interest rates are so high, like um, to even be considered to get a loan, right? It is just, the requirements are absolutely absurd right now. So no one's going to buy, and so you're killing demand right now, demand destruction right now. So with that being said, SPX still has a lot of volatility. Tesla, obviously, because its earnings, BA in JPM is still very high. Now, let's go back to when I was talking about um, the beginning of the year, as far as how much the correction is. 43% is average. So we take our top here. We will look again and see where we're at. So we did just do a little bit more. So we're hitting 27. Again, 43% just on average, roughly. They're sitting roughly around the 2740, roughly. Again, that's average. Again, you can come in lower. You can come in a lot worse. Some have been hit even 80%, right? So it really just depends on how we get control of the inflation. If inflation doesn't come down at a rapid pace, the Fed's not going to dial back. And it doesn't help that you continue to have reports saying that the job market's great. That just means the Fed's are going to come in with higher interest rates. That's all that means. So just be mindful of that. We'll see what happens there. But that's what we got for state of the market. Interesting spot, nonetheless. So coming into this week, again, I really want to see if we can hold this level, right? This 50 EMA, we've really been dancing around this 3,600. The market's really been holding on to that. Again, every time we broke, we've bounced out of it. It's kind of what was kind of leading me to think that maybe we could rally, that maybe this could potentially be the bottom. And then you just had that news that came out with a core, right? And then we obviously sunk from there, and then we pop right back, only to sink back down. So I want to see if we can hold below. If we hold below this 3,600, I think it's going to be an issue moving forward, going into next week. Again, I guess a lot of the restrictions and stuff the U.S. is putting on China as well is hurting their chip manufacturing as well. So LRCX will be interesting to watch moving forward this week, and seeing how well they do. I think they could potentially sell pretty heavy. So we need to watch that as well going into this week. But the 3,600 is a battle, and that's what we'll be watching this week for SPX. Bitcoin, 18K. Again, we need to see if Bitcoin can hold or break 18K. I think is extremely important on a daily. It's been dancing around here for quite a minute, holding very well though. It's made a new low, and then bounce right out. Again, if the market starts to free fall here, which we haven't free falled, which is interesting, because again, normally on breaks, pretty much just get gas to the downside. We haven't gotten that, so that's something you have to keep in mind. So we haven't gotten gas on straight breaks. So, but then again, we haven't opened up after the break either. A lot of it's just been a single candle and then wicked back, pretty much. So that is something to keep in mind, and something we are watching. Tesla, interesting. I was expecting this. I was in a position. I did tag out on Friday, but I'm looking to add more. There is support here at the 185. It looks to get back in at 185 and add there. Again, earnings will be interesting. I think they can still do well. With a question, I think they'll still do very well. But the problem is that expectations, I think they'll come way under. And then it'll be interesting to see if they pull guidance or anything like that. That could be a real big issue, especially with some of these bigger techs, and see where we go from here. But again, forward looking is what is concerning, and what could potentially be driving these down even worse. So I think you get some bad earnings, it could drive us down enough. Again, I don't know what driving us down enough is. I don't know what a bottom is. I don't know. I'm trying to watch price action. Price action is very confusing. The events are very confusing in the way they're unfolding, especially with the manipulation with the media. Not to say it's always been there, but more so even now, when you get all these financial institutions folding, and they're coming out with, hey, we got quantitative easing. I don't know how we're going to fund it, but it's going to happen. So again, Tesla, I'm really watching that 185 this week. I'm not really even watching for a rally. There's been absolutely no rally unless they do really well for earnings. This thing could rocket, bottle rocket. This would be my first one to the upside again, because it's taken such a big hit already. But I'm watching that 185 this week. BA again, just to try to like gauge a value. Um, Again, bottom looking roughly around the 115 mark. If we do start to sell, again, this has broken, held below the 134 here. So I wonder if you see if this does continue to sell here. I believe, again, BAs will follow the market right now in general, just because there's still a lot of fear. Banks are very extremely important. Again, we hit the top of the trend here. See if we start continuing to sell off. Again, could be a higher, lower high here if this does continue to sell, and see if we can retag that 90 or sell off till the 90. Would be very interesting here for the banks. GS uh, has had really good earnings. Excuse me, has had really good earnings. Um, so we have to see how they do on earnings. Again, their earnings is on the 18th. So if they do well, that could help the market. Again, if banks hold well and continue to push, it will help the market in general hold and push. If it doesn't, obviously, it's going to take the rest of the market down. And right now, tech is very weak. So financial value essentially held up the market beginning of the year. Now it's pretty much been the banks. Value really just hasn't done anything. It's just sat there. So that's helped because it hasn't sold. But if it does, if the banks and value starts selling off, then we're in pretty much for a shit storm, because tech is not cutting it right now. So that being said, I'm going to leave it there. Again, be another big pivotal week. Again, we're kind of in that panic mode, but it's a weird kind of panic because we're not just flushing. We're kind of just waking up with new news and then have big spikes down, and then we get picked right back up. So again, this is more of a recession kind of cycle. So it's kind of what you're going to get is this chop, drop, news chop, drop, hopium, pop kind of thing. But now we're in earnings mode as well. So again, if earnings do well, I think there could be a really positive sentiment that's needed in the market. If they do really bad, again, more fuel to the downside is what's going to happen. And then again, you got monetary policy right around the corner. Then another core coming in before end of the year. We just got a couple months left here before the end of the year, so be mindful of that. But if you made it this far, I appreciate you. Go ahead and drop a like button. Until next time, I'll see you guys later.